Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we continued our Forex trading course with a look at how to read a currency quote. In today's lesson we're going to continue our discussion on the logistics of trading foreign exchange with a look at what it means to us as traders when a currency rate increases and decreases. So let's get started.
Okay, so now that we understand how to read a currency quote, the next thing that it's important to understand is what an increase or decrease in the quote for a particular currency pair tells us about the value of the currencies that make up that pair. As we discussed in our last lesson, currencies are quoted in pairs or in terms of how much one currency is worth in terms of another currency. When we read a currency quote, what we are seeing is how much of the second or counter currency in the pair it takes to buy one of the first or base currency in the pair. With this in mind, if a quote for a particular currency pair increases, then this means that it now takes more of the counter currency to buy one of the base currency. Another way of looking at this is that when the quote for a particular currency pair increases, this means that the first or base currency in the pair has strengthened and the second or counter currency in the pair has weakened. Conversely, when the quote for a particular currency pair decreases, this means it now takes less of the counter currency to buy one of the base currency. Or another way of looking at this is that when the quote for a particular currency pair decreases, this means that the first or base currency in the pair is now worth less, and the second or counter currency in the pair is now worth more. To help solidify our understanding of Forex quote movements, let's log into our demo trading platforms and look at a few different currency pairs on a price chart. If you've not done so already, I encourage you to pause this video now and register for a free demo trading account by clicking the free demo registration link above this video if you're watching on InformedTrades.com or in the description section of this video page if you're watching on YouTube. After logging into your real-time demo account, you should see a button which looks like a yellow clock, and where you run your mouse over it and it says Create Market Shot. You're going to want to click that button, and that's going to bring up a Create Market Shot window here. The instrument should say Euro US dollar, and then for the time frame, if it says tick there, change that to 5 minutes, and then press OK. This is going to bring up a chart of the euro dollar, which we can then maximize there, and then we can click the magnifying glass here to zoom in on the chart a little bit. And then we can see here that from about 7:15 this morning on the day of this lesson to about 1 o'clock, the euro went from right around 157.10 to right around 158.63. Okay, so from what we've just learned above, we should now know that this increase in price means that the euro has strengthened against the the euro has strengthened against the US dollar during this time period. Conversely, if we look at the time period just following this, so from 1 o'clock down to about 4:30, we see that the euro has weakened against the US dollar as the price chart sold off, okay, down to around 158.17. All right. The important thing to remember here is that if the price is going up in the quotes window and therefore the chart, this means that the base currency is getting stronger and the counter currency is getting weaker. If the price in the chart is going down, this means that the base currency is getting weaker and the counter currency is getting stronger. Okay, now let's change this to a dollar-yen chart. Okay, still on a 5-minute chart. And we can see here that from right here around 5:20 a.m. to around 7:20 a.m., the dollar-yen pair or the rate for the dollar-yen increased, meaning that the dollar strengthened in relation to the yen. And then we can see right after that that the dollar sold off rather aggressively against the yen or weakened against the yen as the price comes down there. Okay, so same thing. It's just this time the dollar is the base currency instead of the euro. Okay, so that's our lesson for today. In tomorrow's lesson, we're going to learn about the bid and ask quotes and something which is known as the spread. So we hope to see you in that lesson. As always, if you have any questions or comments, please feel free to post them in the comment section below. And good luck with your trading.